We say every company will be like a fintech company. I think every fintech company will be like a stablecoin. Most of the tools that were designed in the past, they were designed for trading. They were not designed for use cases around burning assets, minting assets, interacting with smart contracts. And I think that's where you still see gaps in the market. When a fintech is entering the stablecoin space, they need a combination of a few things. In global settlement, they will need wallets, they will need things around compliance, they need liquidity, and they also need licenses in some cases.
Hi everyone, welcome back to Wrap Up Podcast. Today I'm joined by Bentzi Rabi, co-founder and CEO of Utilla, a company building infrastructure for institutions to manage digital assets, from wallet and key management to internal controls and transaction workflows. Bentzi, great to have you on the show.
Thank you, Sam. It's a pleasure to be here.
Look, in the last several episodes of Wrap Up Podcast, I've had a lot of conversations around stablecoins, payments, and Rails, but what feels like missing, the layer underneath. So I want to understand how institutions actually hold and operate these, digital assets securely. So basically, I want to start there. Just to start, can you please tell me what problems did you personally see that made you actually to start Utila?
Sure. Yeah, it's a good question. So actually, my background with crypto starts almost like 10 years ago. I would say around 2016, 17. I used to work in a startup in Tel Aviv and used to go back home walking. It's a small city, so it's pretty common that you just walk to your office.
All right.
I used to see like people playing chess in some place, and every like Monday or something. So one day I decided to join them and tend to be the Bitcoin embassy. And I think that's like the first time I got like deeply into the space. Later on, like with DeFi coming in, like Chainlink white paper, etc. And I became more and more involved. I think for me, always from like a very early stage, I thought, okay, this can really solve big problems. Okay, like of course, on the trading perspective, whoever bought Bitcoin like in the past made a very good decision. Like in the. But I think like just I guess like my technical background like let me mostly look about the premise, behind with the technology that is actually sitting behind. Right now, 2022 is my co-founder Sam and I. We're just sitting together and trying like to figure out what we want to do next. I was just like finishing a short career as a VC investor, and Sam just got out of Google. It was like a tech lead. Both of us are coming, we are good friends from our like cybersecurity background. We served together and we led some stuff. I think back then we start seeing applications being built on the blockchain. Okay, so 2022 stablecoins were not there yet. But it was DeFi summer. And we started seeing the market shifting from, I would say, trading first, if I would say it, like more from like traditional exchanges or custodians or asset managers dealing, with like mostly centralized players into actually applications being on chain. And for that, we realized that, with this new things happening in the market, like there is a need for a solution, like a wallet solution, that will be able to deliver like a good experience there, right? So meaning like the ability to have more like an infrastructure that is scalable, API friendly, interaction with smart contracts, like everything that is needed for this new era of the market. So that's how we started. Later on, as stablecoins became a big thing, so of course for us it was a very natural shift, like of the market that our product is already serving well.
Right. Bentzi, I see that you guys didn't start from stablecoins from the very beginning. You start trading basically with digital assets in general, including crypto. So what do you think was broken when the companies tried to hold, let's say, crypto or any types of digital assets internally? What was the issue there?
Yes, I would say there were a few issues. Security has been always an issue, okay? And security is like you can think about security in multiple things, and it's still not solved like perfectly because just see what happened earlier this week, like with Resolve, right? Like all the time, as the market is evolving, like there are like some new frontiers that actually you need like to also to be able like to provide security for them. But going
Okay.
back then, I think first of all is how you secure keys, right? And how you do it in multiple blockchains, because maybe in the past when crypto started, like it was okay, Bitcoin, and then it was like Ethereum, and you had like Cardano, and you had all this ecosystem. But slowly, like you started seeing organizations having different wallets set up for different blockchains. Okay, and
Yeah.
uh, this market was evolving to more like multi-chain. I think everyone was looking, okay, how we can actually do everything in like one place, right? So I think one challenge was, okay, like we have like Gnosis Safe, which is very good in EVM, but it's not
Yeah.
solving Solana, right? So
Yeah.
how we can find a way to do everything under the same umbrella. So that's the first thing, like with like institutional grade key management. And the main way to do it is actually utilizing MPC, because until then, most of the provider were multi-sig based, like Safe. And I think the problem was mostly that multi-sig solutions couldn't support well multiple blockchains. And I think the only way
Okay.
to do multi-chain is using MPC. So I think that's like one main challenge that we saw. The second challenge that we saw is, okay, like we know how to solve key management, but what about insider threat? What about doing mistakes, right? So besides of like key management, we also need like the ability to set like internal operational workflows, okay, like limits on users, approval flows, okay, like very
Yeah.
similar to traditional like banking systems, right? So that's like a second thing. The third thing is like once the market starting evolving to not only transfers, but also, more like smart contract based. So, for example, things like minting, burning assets, calling smart contracts, etc. You have like a new area that you need to secure as well, because you don't need policies only on transfers. You need policies
Yeah.
on minting, burning, calling calls, using functions and parameters, simulating what are the implications. So I would say we provide a solution that is covering all of these layers in the end of the
I
day.
see. I see. Bentzi, well, you touched basically the point about holding money. Now, I've heard a lot about moving money. Like basically, everyone is moving money when it comes to stable coins. They have rails and etc. But holding money is totally different thing. And a couple of things: securing keys, policy, minting, and burning. All of these are related to holding money. So, what's actually hard there? What's the biggest problem there, in your opinion?
I think that um, when you w- w- holding money, actually, Utila is designed for clients who are actually moving, who are transacting. Because if you only hold stuff and you don't
Okay.
do a lot with that, I think a qualified custodian might be like the
Okay.
solution for you, which is mostly specialized on, okay, we are a wallet, we are insured, we are regulated, and we help you to keep crypto assets, okay, without
Yeah.
moving them a lot, okay?
Yeah.
Utila was designed for those actually who are moving or assets or doing
Okay.
more in operational way, and that's why they need like policies, etc. But they also need like automations, right? Like to
Hmm.
initiate some transactions. They need webhooks. They need tools around gas management, because if I'm doing hundreds of thousands of transactions like a month, I do need to start thinking about gas, okay? And
Yeah.
gas with a lot of friction. So I think the challenges that these kind of organizations are facing are way bigger than just security. There are actually operational challenges, okay? Because when you start moving digital assets, it's not only, okay, how we make sure that, the private keys are not compromised, and that we don't have a user sending funds to the wrong address. It's also about, okay, how we manage gas, how we do reconciliation, how we get liquidity, how we get global liquidity, right? Because sometimes we want to transact with someone in India that wants to get it like as an INR in the end of the day in the bank. So we do need to
Yeah.
right partner for that. So um, that's why in Utila we designed a lot of capabilities that are relevant for these specific cases of like money movement.
I see. From your experience of building Utila and working with your customers, where do you see things breaking today? I mean, is it key management, permissions, or internal controls? Those are the things that you just mentioned. Where the biggest the biggest problem, or when things broke most often?
I think that I, I I wouldn't say totally solved, but I think key management is more or less solved today. Like we still see situations when organizations are still want to use basic stuff like KMS. But I would say the market is way more educated than it used to be, and I think you do have today, like MPC, for example, which is like already like battle tested for years. You have like trillions of dollars secured via MPC, and it's considered to be like as a trusted way to secure private keys of digital assets. I do think that also in many cases there is still like gaps when it comes to the kind of like depth that you can set operational workflows around, because most of the tools that were designed in the past, they were designed for trading. They were not
Okay,
designed for, like use cases around burning assets, minting assets, interacting with smart contracts, calling some different functions and parameters. Also, like when you deal with like tokenized assets in general. And I think that's where you still see gaps in the market, and that's like an area that we are trying to address, like with having like a policy engine that is designed not to support basic transfers, but also like more
okay,
advanced things. Second challenge is like understanding actually the risk associated with like on-chain interactions. Look at the Bybit hack. Look at Resolve earlier this week. I think that today we still see many things happening on the level of like smart contracts. Okay, there is still a lot of
okay,
there, and you need tools that actually help you like simulate and understand what are you going to do before you do something. That's why we embedded like the ability to to understand the context of every action, which is not just moving an asset, but also like calling a smart contract, embedding solutions like hypernative blockade that are more helping like on understanding like the context of like interacting with a smart contract and can operate in real time when they actually understand there is an attack. Uh,
okay.
and I would say sometimes it's still like lack of knowledge. Okay, we still sometimes see organizations not setting like the right operational workflows, for example, and that's why we are also having our like a CS team that is like dedicated like to help our clients to onboard, to make sure they set their all operational rules, etc.
Right. And basically, from what you said, I understand ops and risk management to be one of the biggest problems so far that companies are not able to solve properly, right?
Correct. Again, you can also like work with like a stablecoin, and if you didn't do all the right work on understanding actually the risk associated with that and behind,
Yeah,
like is it regulated, not like what's like the what are the mechanisms behind, right? Like to protect
true.
clients, etc. You can also, so you can have the best like wallet infrastructure, the best operational workflows, but if you will be involved like in a project that is not working,
Hmm.
you can be damaged, right?
I
Just because
see.
an external partner of you like was not operating in the right way. So there is still a lot of supply chain risk, I would say, or dependency
Right,
risk. You can still operate, but
right.
you also need to make sure that your partners are operating on
Okay,
the way.
makes sense. And Bentzi, I asked my listeners what questions I actually should ask you guys, and they said I will paraphrase this question a bit. So I'm a fintech today. Why would I use Utila instead of, let's say, Fireblocks or building in-house solution?
It's a very good question.
Yeah.
Um, I will also talk a bit like more like general, not only utility
Okay.
blocks, but mostly like talk
Yeah.
about the market in general and what are the options that fintechs are having today. Okay.
Sure.
Um, so when a fintech is entering the stablecoin space, they need a combination of a few things. Okay, they need
Okay.
and it doesn't really like it, and it not really depends on the use case they want to solve. In every use case, they will need more or less the same thing. So whether it's like pay-ins, payouts, treasury managements, in global settlement, they will need wallets. Like they will need like the
Okay.
ability to old different forms of like stable coins,
Yeah.
there and move them around, of course. So like initiated some transactions. They will need things around compliance, like, okay, like we are receiving or sending funds, how we make sure it's like, like, okay, like with AML, travel rule, etc. They need liquidity. Okay. So they need the ability to convert from USD to USDC, from USDT to, so to a Brazilian real, right? So they need like the
Yeah.
ability, you need to swap sometimes because in some case they will get USDC, but they need USDT for the off-ramp side, right? So they do need like
Yes.
this liquidity. And they also need licenses in some cases, right? Because when you start working with stablecoins, even if you have a payment license, you are an EMI, you still like, let's say, need a MiCA license because you operate in Europe on stablecoins, right? And in many
Okay.
won't have it, right? So
Yes.
now fintechs have two options. One option is to go and use a provider that have everything already inside, um, which is I like to call them like black box or stablecoin 1.0, which is more good for when you experiment with stablecoins, but you don't touch them yet. So BVNK, Bridge, Zero Hash, there are many players in this space. The good thing about them is that they give you everything out of the box. You don't need to take care of license, wallets,
Yeah.
AML, everything is like one place. You can tomorrow
Sure.
come out with like a PR, hey, we support stablecoins.
Correct.
What we see, and the second option is building your own stack that you control. Okay,
Yeah.
so you are setting up the wallets, you are connecting these wallets to different liquidity providers. You set up your like AML rules, like with like Chainalysis, Elliptic, TRM, etc. And you also have your own licenses. Okay, so that's like
Okay.
the ways of doing things. We expect to see players, fintech players, eventually going in the second direction. Okay, so when they start,
Mm.
I think especially not having licenses, actually enforcing them to use like the first option, which is having a provider that is like more like a black box with everything inside. As they grow, fintechs, payments companies in general, they want to control the stack. That's the way to get
Yeah.
bigger margins. Okay. That's
Yeah.
why, and that's the narrative that you are seeing a lot, stablecoin 2.0, which we call it, which is like the second evolution, which is moving from black box providers into we owning the stack. We have our licenses, we work directly with like liquidity providers. This can
Okay.
solve 90% of the costs today. Okay, because
I
instead of
see.
paying bips to a player in the middle, you put capex at the beginning, you set up stack,
Okay.
and then you control the flow. Now, in this area, you have Utila and Fireblocks. Okay,
All
and
right.
and for your question, I think first of all, I have a lot of respect to Fireblocks. We have many
Sure.
friends there. We are from the same city. We are sitting here on the same building. Uh,
Sure.
on the other end, I think that, and this is something that is happening in every market, you have players who are traditional and they were built in a different era, a different evolvement of the market. 10 years ago,
Okay.
this company started, trading was the main use case for crypto. Okay. When
Right.
Utilla was started, like 6, 7 years after them, we saw that the market is shifting mostly like to applications built on chain, DeFi, stablecoins. We built a solution much more
Yeah.
focused on this world, which means,
Okay.
first of all, from the signing architecture, okay, like Utila is built for supporting like large scale a transaction count. Okay, so we have parallel MPC signing, we optimize for high throughput payments volume. I think trading first solutions like Fireblocks, they are much more sequential when it comes to their signing.
Okay.
They optimize for high value but low frequency trade. So we see that
Okay.
you actually stress test in like a stable coin flow. You see, the difference. Gas management. Okay, like in Utila,
Okay.
we have automated batching, sponsor transactions. Gas is a cost line at scale, right? On trading first wallet providers, it's very basic, very manual. Um,
Okay.
Also the APIs, right? Like, so we are like much more like focused on API, which means like much more like fast to easier endpoints to work with. Also, we are fast to integrate to new ecosystems. I think trading first, they are much more focused on, like just custody, staking, manual stuff, less like robust APIs, which is also like a big pain point. And I would say also the scalability model in general, right? Like we have
Okay.
We don't need like to have like wallet multiplication. In some other providers, you might need like to have like a wallet proliferation to achieve higher throughput, and that's like another thing.
Right.
So just to sum it up, scalability, better APIs, gas tools, which are all critical for payments workflow.
So those things make Utila different from
Yeah,
other
yeah,
players in the market. Okay,
yeah.
that sounds great. And Bentzi, again, there is another listener of mine asked question, but this time about regulation. So do you guys design your products around regulation, or do you try to abstract it away?
So Utila acts today as a tech provider, okay, which
Okay.
means that usually our clients are the ones and who are having a license. And as I said, today we see more and more like players who are entering the space and they need a combination of licenses and wallets.
Okay.
Um, because so far, if you think about it, like, like the main players who work with wallets were like already like, like crypto related companies with the right licenses. Now, when you have fintechs entering the space, they need
Okay.
time. They have much more like strict compliance. Like they need
Mm-hmm.
actually to get ready for holding crypto assets, and a part of it they need to start working on licenses. On the
Okay.
same time, they want to start doing something already because they do already see a demand, right? They already
Right.
see, like how much they can make their business much more efficient. They can reduce costs, etc. And this is why we are also now starting to work with like partners who can also help on the licensing side, just to help those
Okay.
who are looking for a solution that is also licensed, because they don't, have right now like the relevant licenses or like the board approval to actually hold crypto directly. So we are
Okay.
actually now starting to partner with like other providers who are more like regulated, etc., which can be like a complementary solution. Because I believe there is a lot of power on like having this flexibility between like institutional grade, wallet infrastructure and like
Yeah.
I would say like licensing offering as well, which is also enabling you to, to, I would say in a way, keep the same wallet infrastructure in the moment that you
Okay.
give your own license, right? So unbundling things is always like powerful in my opinion. And that's like a great example.
And Bentzi, you just mentioned institutional grade wallet infrastructure, but what does it mean? Can you explain that to me?
Sure. I think that when I think about institutional grade wallet infrastructure, I think about, okay, what are the different capabilities that, institution is a very misleading word, because when I say institution, people are imagining, like JP Morgan, right? Like
The,
biggest.
the same thing came to my mind. Yes.
Yeah, but in the end of the day, I can tell you that today, and that's like the bit of a crazy thing about digital assets, that you can see teams of like 3, 4 people that are moving
Okay.
billions of dollars, like
All
in a
right.
year, right? And I would say when I think about the term institutional grade, I think about in terms of a team, not necessarily a
Okay.
very large team. It can be a small team that is
All right.
moving or dealing with large amount volumes of like transactions and assets. Now, what they need? So they
Okay.
need, you know, I like military grade security, right? Because they touch a lot of assets. So it means you need a system that is designed in a way that it's like impossible, let's say, to get hacked. The
Mm-hmm.
ability to have like internal workflows, as I said, because it's not like a retail user just using his own wallet for like buying something and that's all. It's actually a team of people who are like accessing the same wallets, and you need to
All
make
right.
sure that you can set the right rules, like the right limits, everything.
Okay.
Third thing, I would say scalability, right? Because when you are moving a lot of assets, you do many transactions, you need a wallet solution that can handle it. Okay, retail solutions were not designed to do like many
Okay.
transactions at scale, to manage gas at scale, like to do batching, to do these kind of things. Institutional grade wallets were designed for that. Okay, so they were designed, not all of them, right? Like the trading first, less, the payments first, more, right? But how you can do many transactions in scale, right? So I would say
All
it's like,
right.
you can use maybe like a bicycle when you want to like to ride inside your town, but once
Yeah.
you want to get like to another city, you probably like need a car that can like be faster,
True.
etc. That's like the kind of way I would think about.
Right, makes sense. And then I also want to touch a couple of news, very recent news. I want to get your opinion. For example, Mastercard acquired BVNK, one of the players, one of the stablecoin providers in the market. What do you think? Should we expect more of a consolidation in coming months and years, like the big players acquiring smaller ones? Or is it better for companies like BVNK or like Utila, for example, to stay independent from other players?
First of all, I think that the acquisition of Bridge by Mastercard is like just of a BVNK, sorry, by Mastercard
Yes.
is another evidence for like for what we are saying, that stablecoins are here to stay and to actually to disrupt the way money is moving around.
Yeah.
Today, um, of course, Stripe started it, but now we see almost every payment company not necessarily just buying stuff, investing in companies. So Visa, for example,
Yeah.
also very they do many things on the partnership side, on investing directly in companies, etc. I think they even invested in
True.
BBK, if I remember correctly. But you see also players like Payoneer, WorldPay, basically everyone who is dealing with payments are already doing something. Okay, it can be acquisition, it can be announcing something, it can be
True.
issuing a stable coin, and not only fintechs,
True.
also enterprises. You see Meta, you see, so basically everyone is getting there. So overall, it's good news, right? Like it's just another evidence for the adoption, from the traditional players. Now,
Yeah.
in many cases, I do think it makes sense a lot to combine a few things under the one umbrella in order, like,
Hmm.
like to grow adoption. Because in many cases, companies can be, very focused on like building like a digital asset infrastructure, but in order like to really like disrupt payment rails, you need like always like a combination of like compliance, banking,
Yeah.
additional
True.
rails, and crypto rails, right? I think that's
True.
why I think it makes sense a lot to combine these things. Like Mastercard, they already have like their global network. They are in the ground everywhere. Like BVNK, they built more like, I would say, even like a mix of like operational crypto and also like banking operations in a way. But I would say and
Okay.
into like a big player with a big network will actually like boost the business there with like everything
Right.
fine.
Right.
But we see a lot of bridge. It's the same, right? Like they build two legs, like banking operations, crypto operations, and now embedding it into like a Stripe, like a global player, like with like a massive reach. Like this is actually like
Yeah.
with
Yeah.
relevant licenses, etc. Only
True.
now increasing the adoptions. Okay, Utila is today mainly playing on the crypto side. Okay, so
Okay.
we already do partnerships with like more like compliant regulated entities, and I think that slowly we will see more and more things happening there of like a combination of a few services like under one umbrella. So it makes sense a
I
lot
think.
in my opinion. It's very
Okay.
difficult to specialize in everything just in one company.
Okay, makes sense. But I want to challenge you here. I, well, it seemed to me that one of the advantages of BVNK was the number of licenses they hold. So you said at the moment you guys are rather partnering with providers, let's say for let's say regulation or compliance. Do you think it's a good idea rather go and obtain your own licensing in the markets? What do you think?
Yeah, you ask a good question. And I and I think every tech provider in the space, they're asking themselves the same question today. Okay, should we
Okay.
focus just on tech? Can we do things that are not only tech?
Right.
And I think it all depends on, like where do you see like, the greenfield in the market? Do you think that the lack of licenses is really like influencing your business or not? Like, um, what's the right focus, right? Like because when you
Hmm.
start getting licenses, it influences your ability to innovate on the wallets on the technical side. Okay, like licenses are coming also with like a lot of things you need to take care of that makes you also slow in some other
Okay.
areas. Um, and I think because of that today, like getting our license, like it means like actually in a way shifting the DNA of the company from tech oriented to more like a compliant company, which is like a very dramatic move. I don't say it doesn't make sense,
Okay.
but I think that this is like a decision that I think is is influencing the company a lot than just, okay, let's just add like a cold wallet offering, okay, which is just adding like another technical service.
I see.
And I do think because of licenses are coming with a lot of demands behind and requirements, I think it makes sense in many cases for many of these wallet providers to find the right partners there. Again, you can still do everything inside, but it will really influence your ability to
Mm,
deliver the best wallet infrastructure in the market, which is still like a main critical part. You don't have many players there. Everyone needs it in the end of the day, and everyone needs something like scalable, something that they can rely on, something that can also like adopt with the new evolvements in the market. And being like regulated is in a way going against it in a way, right? So you do need like to
I
have someone
see.
specializing in tech. That's the way I think about it, and someone specializing in more like compliance and stuff.
Makes sense.
Organizations who try to do both didn't manage to do it well. Okay, so there are some of the names we mentioned before that were also trying to develop their own wallet solution. Was it
Right.
a good competitor, I would say, to traditional institutional grade wallets? I don't think so.
Okay. Okay. So basically, it's about focus. At the moment, you guys are
Yeah.
focusing on one aspect of the business rather than trying to grab everything. So you are more focused. And you would rather recommend to be focused than trying to do everything at the same time.
Again, yeah, things can change, but um, but what I want to say, there should be a very good reason for a tech provider to start like having
Just
licenses.
makes sense. Bentzi, I have so many other questions, but unfortunately, we are limited on time. My last question would be what we should expect from Utila in the next couple of, or let's say in the next 5 years. Where are you guys headed?
I think it's very simple. Stablecoins are going to be like a main part of every form of money movement.
Yeah,
And again, we haven't even talked about tokenized assets, tokenized deposits, which is like another huge area. We just talked
yeah,
about stablecoins.
yeah.
But the way I think about it, in the past they say like every company will be like a fintech company. I think every fintech company will be like a stablecoin or a blockchain.
Stablecoin company.
Yeah, yeah. Everyone needs a wallet behind. Okay, like that's like the most critical part you need. Okay, you start a business, you need a bank account. Okay, you start
Yeah,
like stablecoin operation, you must have a wallet behind, right? That's why I believe that Utila is like well positioned to serve this new era of the market, to be, I would say, the go-to solution for many of these players who are like actually becoming slowly a blockchain-based company. Uh,
okay.
that's where we aim. That's what we are like building for. I do think that there are still like many things to do. You have new ecosystems, like Tempo, for example. You have like still a lot of things to innovate around, like gas management, around um,
Yeah,
also like there are new regulatory requirements in different regimes that are also like influencing like wallet solutions. So there is still a lot to do, but I'm very
okay.
optimistic. Everyone in the end will need a wallet behind, and we are there.
Sounds really great. Bentzi, really enjoyed this conversation. Thank you for showing up on our show. And for everyone listening, if you like this episode, don't forget to subscribe and share this episode with your friends.
Thank you, Sam.